All right, here we go with everyone's favorite weighted average method. This one's different because it's not making the assumption that we're going to go in a certain order. We're going to make this a little bit different. We're going to make everything the same price. We're going to figure out what that weighted average cost is and just assume everything is the same. So I do want you to make notice that this is not average. This is weighted average. So it's a little different than what you would normally think of just a basic average. But let's talk about the definition first, and then we'll get into the example. So this assumes a cost flow and a weighted average of the cost available. The conceptual statement here is not going to make a whole lot of sense because it's very wordy, but you'll make a lot more sense when we actually see that visually. So conceptually, as the sales occur, weighted average computes the average cost per unit of inventory at the time of sale and charges it to the average to cost of goods sold, leaving the average cost of inventory on hand to the inventory account. Again, a lot of words, a lot of averages, a lot of different things. But I want to show you this visually how this works. So let's go back to our example. We're a Delta company again. We sold 29. Okay, wonderful. Let's go ahead. We don't care where they come from. Now, weighted average has 3 steps. If you remember these 3 steps to figure out weighted average, it's going to make your life a whole lot easier. The first step is I want to multiply everything out. I know that I have 9 units from January 1st, and those 9 units cost me $25 a piece. So if I multiply 9 times 25, that's going to give me $225. And if I do the same thing for April 15th, I multiply that out, multiply it by 27, that's going to give me $432. Same thing for October 13th, multiply that out, that's going to give me $660. Okay, that's step 1, multiply everything out. Step 2, maybe even a little easier, add those 3 together. In this situation, those 3, but add those up. Okay, if I add those up, that's going to give me a total of 1,317. Okay, step 3 is I'm going to divide that by the total quantity that I have available to sell. So we have 9 in January 1st, we have 16 in April 15th, and we have 22 in October 13th. So if I add those quantities up, that's going to give me a total of 47 units. That's what I have available to sell. Divide that out, that's going to give me a weighted average of $28.02. Now, what does that mean? Okay, what does this $28.02 mean? Well, that's very important because now that I have $28.02 per unit, I don't care what's $25 and what's $27 and what's $30 because all I know now is that all of them are $28.02. It makes my life a whole lot easier because now if I have to sell 29 of them that I did, I don't have to keep up where they came from. There's just 29 at $28.02 a piece. That's what it cost me. So again, it's not average because if it was average, then we would have just multiplied or we'd have added up 25 plus 27 plus 30 divided by 3. This is weighted average. It's based on the quantity. So that's what makes it a little bit trickier. But if you know those 3 steps, it makes your life a whole lot easier. And you'll see this again in the example in the next video when we actually do it in practice. So appreciate it.